Are you tired of watching your paycheck disappear before the month ends? Do you dream of financial freedom but feel trapped by debt and bad habits? What if I told you that millionaires don't just earn money, they make it work for them? In this channel, we'll dive deep into smart money management strategies that turn your finances around. No gimmicks, no shortcuts, just proven tips on budgeting, investing, and building wealth that lasts. From breaking free of debt to creating passive income streams, we'll transform your money mindset. Welcome to the Money Management, where you master your money, not the other way around. Hit subscribe, turn on notifications, and let's start building your financial empire today, because your future wealth starts now.
Analysis. That's one word that scares a lot of people. We hear words like analysis, valuation, discounted cash flow, and immediately think, that's for experts. That's not for me. We feel like this is something only professionals can do. But starting now, every week, I'm going to make videos and teach you step by step how simple fundamental analysis really is, how you can learn it step by step, and very soon you'll become a fundamental analyst yourself. Let me ask you something. If you want to buy a car, do you need to be an automobile engineer? No. If you want to buy a house, do you need to be a civil engineer? Of course not. Then why do we think that to buy stocks, we need to be a CA, CFA, or have an MBA in finance? That's just a myth created by so-called experts, so you never become financially independent. But that ends now. I'm starting a full fundamental analysis video series. With every new video, I'll teach you step by step how to do fundamental analysis, and you'll become an investment expert. And trust me, it's way easier than you think. You don't need a commerce background, you don't need prior knowledge, you don't need any fancy degree. You can absolutely become a smart stock picker. Today, we begin fundamental analysis. Discounted cash flow, equity valuation, fundamental analysis. These terms sound super complicated, but here's the crazy part. Every single one of you already does fundamental analysis every single day, multiple times a day. Whether you're watching movies, listening to music, or watching cricket or football, you're constantly doing analysis. Let me explain. Take cricket. Why is everyone always talking about Andre's goose? Two simple reasons. His past track record is strong, and his current form is strong. He's scored tons of centuries. He has a solid average. His recent performance is impressive. So whenever he walks out to bat, we expect big things from him. Why? Because we've analyzed his stats: runs, centuries, strike rate, average. We looked at the numbers and said, yeah, this guy is solid. That's fundamental analysis. Now replace the player with a company. You check how the company performed in the past, how much profit it made, how much sales it generated, how it's performing recently, and then you estimate how it might perform in the future. If a company has been performing consistently well for years, it's reasonable to expect it may continue doing well. That's it. That's the core idea. Now, let's simplify it even more. Whenever company analysis is discussed, you usually hear three things: profit and loss statement, balance sheet, cash flow statement. They sound intimidating, right? But they're actually super simple. Let's break them down using cricket again. Profit and loss statement is basically recent form. In cricket terms, what's the player's average in the last 10 to 15 innings? How many centuries recently? For a company, P&L tells you how much sales it made in the past year, how much profit it earned. Simple. Next, balance sheet. In cricket, besides recent form, we also look at career record, total matches played, total runs, total centuries. That's the career summary. Balance sheet is the company's full career story. Since the day the company started, how much money it earned, where it invested that money, what assets it owns, what liabilities it has. It gives you the complete picture. Now, the third one, Cash flow. Sometimes commentators go deeper. They show stats like runs in India versus runs overseas, average at home versus average abroad. That's deeper analysis. Cash flow does the same thing. A company may show profit, but did actual cash come in? Did it generate real money, or did it take loans? Where is the cash actually coming from? Where is it going? That deeper breakdown is cash flow analysis. So now I hope the difference between P&L, balance sheet, and cash flow is crystal clear. And this logic applies everywhere. In football, in IPL auctions, when you choose actors in movies, when you judge singers, even when you go shopping for shoes or shirts. You compare quality, past performance, price, alternatives. That's analysis. You already do it. So if you can do it in daily life, you can absolutely do it in the stock market. Now, let's quickly talk about technical analysis and why I'm not a fan. Technical analysis tracks price movements. For example, if a stock was $100 1 month ago, then $90 15 days ago, then $80 yesterday, technical analysis might say it's heading to $70. Now, imagine this in cricket. If Andres Goose scored 40 runs, then 30 runs, then 20 runs, does that mean he'll score 10 next innings? That sounds ridiculous, right? That's why blindly following short-term patterns doesn't make sense. It just copy-pastes recent trends into the future. Now, let me give you a real-world example of fundamental analysis. Suppose you want to start a clothing retail business, selling jeans and t-shirts. Before buying a shop, what would you check? Step 1, location. You'd pick an area with strong foot traffic because sales matter. In stocks, that means checking sales growth and profit growth. If sales and profits are rising, the location of the business is strong. Step 2, size. You don't want a shop that's too small or unnecessarily huge. In companies, you check revenue size, market cap, number of employees. Is it a small business, mid-size business, large business? Step 3, price. Is the property worth what the owner is asking? In stocks, people make a huge mistake. They think $10 stock is cheap, $1,000 stock is expensive. That's totally wrong. Just like with property, you'd ask, what's the size, what's the profit, what's the location, not just the price tag. Step 4, competition. Are there 10 similar shops nearby selling the same thing? In stocks, you check competitors. If you analyze a bank, compare it with other banks. If you analyze a tire company, check its rivals. Step 5, legal safety. Is the property legally clear? Is the owner trustworthy? In stocks, you check management quality. Any legal cases? Any pledged shares? Is management transparent? Step 6, ongoing costs. After expenses, will you actually make money? This is where cash flow analysis comes in. After paying loans and expenses, does the business still generate real cash? Step 7, compare options. You don't buy the first shop you see. You compare multiple options. That's valuation analysis. Compare similar companies and choose the best one at the best price. See? These are the same 7 steps you already use when buying property, and when you buy stocks, you're basically becoming a partner in a business, so the logic is identical. My goal in this video was simple, to show you that fundamental analysis is not scary. It's not rocket science. You already do it every day. In upcoming weekly videos, I'll go deep into each step. We'll do live examples, we'll practice valuations, we'll check management backgrounds, we'll compare companies, step by step. If you're serious about mastering fundamental analysis and learning advanced stock pricing techniques, you can join my Academy of Value Investing course where I teach detailed valuation methods through structured lessons, quizzes, and downloadable material. I love interacting with you guys. You can connect with me one-on-one as well, and we'll keep learning, growing, and investing smarter. Together, let's get to work.